doing? How's everyone's trading week been? Thank you. Yeah, I just realized I changed some settings around. Slow week, two losses. Okay. Still learning. Yeah, I mean, when you're learning, sometimes it's best not to actively trade and just forward test. Um, Best way. Two L's, one W. Not good. Excited to keep learning. Okay. So maybe you need to just focus on the learning aspect rather than the trading. Five losses. Wow. Wow. Riz. Maybe we need to look at something there. Um, yeah, I mean, honestly, the best pair to trade this week was gold. Gold was the best asset to trade this week for me personally. NQ just ranging between liquidity points, nothing clear on NQ. And then on the CFD sides, there were quite a few good entries, Euro AUD, Euro USD, quite a few good entries on the CFD side. All it takes is one trade, guys. All it takes is one trade to make a week. And I do believe gold did that. Guys, can you hear me? Yeah? No, it must be right. If the majority can hear me, then um it has to be someone. It has to be your own Discord. Try going restarting it, doing all of that stuff. Okay, let's get started. Well, first things first. We've got quite a lot of people here today, so whether you're in the learning stage or you're experienced with the model, I'm going to try to break this down from like a very, very basic to advanced understanding of inducements and traps, especially reaction candles. That's something I want to focus on today. Um, so feel free to put your questions in the chat. I'm going to focus on the charts, and then I'll look back at the chat near the end, and then we can answer some questions, and we can look at all other assets as well. So let's start with gold. Started to do on the left hand side of trading view. I've got the higher time frame, so the weekly, the daily, and the 4 hour. Okay, and then on the right hand side, more intraday time frames like the 1 hour, 15 minute, 5 minute, etc. Okay, so let's just break down on the higher time frame what gold has done. Okay, now I am using the futures chart. If you trade XAU USD, then obviously on the CFD, then I would recommend you use the XAU USD chart. But because I trade gold futures, I am using GC. So let's just break it down. We have a breaker structure to the upside. Now, once we've broken structure to the upside, notice how we have this reaction at the lows. Okay. Now, this webinar was all about reactions, traps, and inducements. Now, the reaction is really, really important because once we tap back into this area and move away, when I'm talking about moving away, we're talking about a breaker structure. Okay, notice how we break structure to the upside. What we've now done is engineer liquidity at these lows. Okay, so what does the market come and do then? So this move up, okay, this move up through this breaker structure has induced buyers again. So where are buyers looking to take positions? And something I've been testing recently is price comes to tend to fill the imbalance. So notice this reaction. And then what do? We break structure again to the upside. Again, indicating to us we now have liquidity at these lows. And that's how you break down that higher time frame using those reactions. Now, what does that look like on the H1? So we broke structure to the upside, we came back down, respected this area, and we moved away. We broke structure, okay, back to the upside. Now, um, we're gonna go through it week by week. Sorry, We're going to go through it day by day. Okay. So if we just look at what happened on each of the days, right? On Monday, we gapped up. We respected this area on Tuesday, okay, and Wednesday. Thursday then took out the high, inducing buyers, and then we start to have that sell off on Friday. So um, let's go through that um, day by day. Okay, so this is where we gapped up. Okay, notice how we now just focus on this. Okay, so notice how we take these highs on the higher time frame, so the H1, inducing buyers. Now, this breaker structure to the upside has induced buyers. What are we waiting for? If I zoom into this PA, we're waiting for a reaction at the lows. Okay, now look what happens here. This whole candle or area, okay, look how we respect it. Okay, now if we have induced buyers, okay, we are not looking to buy in this area. Okay, there are going to be traders who try to catch a reversal. You can see these early sellers. Now, notice how we have this little breaker structure to the downside. However, we are still respecting the low to the left that caused that inducement higher. Now, I don't know at this point whether price is going to come higher and take all of these highs. Okay, I wait for price to trap those early sellers. Now, where does it trap those early sellers? Well, again, we mark out the reactions. Where is the liquidity? Notice this candle here. Look at how we tap into it and we have a breaker structure to the downside. What do we now have above this candle? We have engineered liquidity, and price comes and takes that liquidity. It even comes and takes out the inducement high, okay, which caused the breaker structure here. So I'll wait for that reaction to happen, okay? I'm not trying to catch this extreme yet. Now that I've formed a liquidity block, why? Because we induced sellers and now we've trapped them. We now have a liquidity block. So I can mark this candle out as a liquidity block. Now, what am I waiting for next? I'm waiting for that reaction again. What has this move done? It's induced buyers to the upside. So I wait for price to come back down to the lows, okay? And look at what we have here. We come back in, okay? We're waiting for that reaction to induce buyers. However, we know that price shouldn't run this high. Look at how we induce sellers and then we come up to the extreme and we trap them. Okay, now why did I wait for this high to get taken? You could have tapped into this LB and taken an entry straight away. Okay, but I just noticed that this is a candle that gave this reaction, okay, this to this downside, this breaker structure. So there's liquidity above that high, and that's where I took my position. So this is a trade that I took on the futures accounts, and if you took this on a CFD, you would be holding all the way down to the lows. Okay, which lows? The lows we were talking about, right? Okay, where we engineered liquidity, where we essentially came into this area and broke structure from. Okay, so look at the RR there, insane. So what do we then do? We start to break down lower. Now we always have to remember the higher time frame. The higher time frame shows us that we've induced buyers. Any reactions to the left should be false and should give us an opportunity to enter the market if our model presents itself. So what I like to do is mark out where we can have possible reactions from. Okay, now I wait for that reaction up. Okay, notice how we're inducing sellers. We come and we trapped them. So we had a break of structure here to the downside. We break structure to the downside, just inducing more sellers. Sellers start to see these bearish candles. They tap into this area, and then we have that bullish move up, inducing buyers. Now, you could have taken a direct entry here because we do have a liquidity block above. However, okay, what you would have waited for is this reaction again. So notice how this is a breaker structure to the upside. Okay, think about where, again, look how we fill that imbalance. Look at where retail are getting in. We respect this area. And what am I waiting for again? This is an LB. Look at how we have a reaction. Again, this is really, really important to note, okay? We have a reaction, a false reaction. Okay, these are early sellers who are getting into the market, and then we just trap. Okay, we trap them. Now, this is another position you could have taken. As soon as we enter into that LB, we have somewhere to put our stop loss. So therefore, that is your second entry. Okay, now where would you be targeting? Again, on a CFD account, you'd be holding to the lows. Okay, for a 1 to near enough 11.55. Okay, so moving on, we start to break down. Okay, now look again, look at the reaction from this candle. What caused this breaker structure to the upside? Well, let's mark that candle out. Okay, so we have this reaction again. We induce more sellers. Okay, we're going further down the leg. What happens is we have a reaction up. Okay, now what have we done here? We've basically created a liquidity block. Okay, this area here, or this candle, is a liquidity block. And what do? We start to sell off. Okay, we induce sellers. And then what do we come? Look again, the reaction. Okay, what caused this breaker structure to the downside? Okay, this is why it's really, really important to mark out the candle that caused the reaction, caused the breaker structure. We now have liquidity above there. We also have liquidity at these highs. Anywhere above these highs, we tap into the LB, and that is the third short down. Okay, stops above the LB. And again, notice how all it takes is one trade to higher time frame targets, and that can make your week, your month. So we induced buyers on this higher time frame move up. We've now come down, okay, to trap them. Okay, so look at where, so your exit is just as important as your entry. Okay, look at how we have all of these lows. Okay, the market comes, we have that reaction higher, and the market comes and takes all of those lows. We've now trapped these buyers. We have an LB below. Okay, now this is not a position I would take a buy. Why? Because it's with engineered liquidity. Okay, price could have come and just taken these lows. So I would have waited for this reaction up. So look at all of that liquidity we've now built early week. So all of this liquidity we've built early week. We've now taken buyers out. And then we have that bullish move up. Now, this is really important. Okay. So these were 3 shorts on the way down. Now, if I just clear, look at how this move here, by taking out these lows, what have we now done? We've induced sellers. where are sellers looking to take positions. Okay, look at how all of them just get trapped. And then we come to the extreme, we respect this high, and we have a break of structure to the downside. Okay, we have a break of structure to the downside. And then what we do is we come up and take that liquidity. So we induced sellers and then we trap them. Okay. So what have we now done in this move up? We've induced buyers. Okay. Now where did this reaction come from? We'll mark that candle out. Okay. This candle to the left is where we tapped into and broke structure to the upside. Look at the reaction. Okay, now we've induced buyers. Okay, for the rest of the week, we can look for sells. So this was on Thursday. Now I'm not trying to catch an extreme entry here. Okay, so what I do is I wait for PA to play out. So we've induced buyers. Look at the reaction we have at these lows. We induce early sellers, trying to catch that reversal, and then we come up and we trap them. Okay. Now, this now forms an LB. Okay. Now, this isn't something that I would take personally. Okay. As on an extreme. However, this move up has induced buyers again. We come up, we tap into this LB, and then look how we tap into this LB at the extreme. The same model playing out. Okay, we have a build up at these highs. Now you could have taken that as an extreme. However, look at the timing. We're near market close. Not something I'd take. I'd wait for those reactions. Now look at this. This was an entry in London. Okay, we come back into this area. This whole area to the left, we can refine it. We come into this LB. Okay, and we have that reaction out. Now we have an LB above, we form a second LB. All we're doing is we're waiting for that reaction. Look at where we induce sellers. Look at the candle that caused that reaction. Okay, this is the candle that caused this reaction down. Price comes and takes it, and that is another entry. Now this happened in London. Okay, and you would be taking this again all the way down. Whoops. You'll be taking this all the way down to the lows. Okay, you could have taken it to where the reaction happened from, but I'd be taking it and holding that position down to my final target. And that was pretty much the PA that we had for last week. Okay, so that was last week's price action on gold. Questions? Yo, what's going on, Elijah? What's going on? Inducements? Yeah, I'll look at inducements for sure. Can be good trade if we see that we respect those lows and first fill low imbalance candle, and of course we don't take these lows. I don't understand your question, Alan. Any questions on what I've just gone through on gold? Any questions? I wouldn't go BE. Yeah, I use the 1 hour predominantly. It's all fractal. It's the same thing on the 15-minute. It's just cleaner on the 1 hour to see where that breaker structure comes from. Yeah. The second trade at Monday. The second trade on Monday. The second trade on Monday. So you're talking about this trade here. Yeah, I'm just showing you where we reacted at the lows. Okay, it doesn't look like there's a build up here on the 15, but if I scroll down, you can see. Yeah, I'm hoping that's clear. So this is the second trade I'm talking about. Look at how we're reacting and moving away, reacting and moving away. Okay, and when we come and take that extreme inducement high. Okay. Yeah. So that's what I'm talking about. This build up, early sellers pushing price down, and then we come back up and we come into that LB. We trap these sellers essentially. Yeah, good question. Yeah, I'll show you guys through I'll show you guys through a diagram what I'm talking about. So you guys can see exactly what I mean, yeah? So essentially what I'm basically trying to say here is, let's say we're bullish. Yeah, let's do in fact, this is what we did. We induced sellers. Essentially what we did is build loads of liquidity at these lows, and then we induced buyers. Okay, so we induced buyers. I'm just talking about what we've done on gold so far. So just to break this model down, okay, this is a breaker structure. In fact, let's write it. This is a BOS. Okay, so this is a breaker structure to the upside. This is now forming an extreme, but we don't know if this is the extreme. What we wait for is we wait for reactions. Hold on. What we wait for are reactions at these lows. Okay, so I wait for essentially price to build liquidity every time. So let's say we tap into it. Every time we tap into a trap area, I want to see a breaker structure to the upside. I then want to see, so I will pause it there. So let me just pause that there. So now what we've done is we have these early sellers trying to catch a reversal, for example, and we trap them. Okay, but what has this move from A to B done? Okay, again, this is a breaker structure. We've induced, this is what I mean by an inducement. We've induced buyers, okay, by this move up. So what you now want to wait for is these areas again. No matter where these areas are, it could be in the middle of the range, it could be just at the top. I want to see a reaction back down, okay, essentially something like this. Tap back into, maybe that's a LB, an imbalance, and trap, okay, and target that liquidity that we've engineered. Okay, so just to break this model down once more, okay, we now, by this reaction here, so that reaction there has induced buyers. So we broke structure, so that we now have liquidity below there. Okay, and then this is now your trap. Okay, this is where sellers induced, buyers taking positions. You want to see that reaction from buyers, and then what you do is you take your entry stops above the LB. So what are you targeting? My rule is minimum 1 to 3. So that's what you would target. This model here is fractal to every single time frame. Okay, you look at the bigger picture. Who have we induced in the market? Okay, if we've induced buyers in the market, I will be selling into that liquidity. I'm hoping that makes sense. Yeah. Yeah, I'm hoping that that diagram makes sense. Yeah, it's literally the model I use day in, day out. Yep. Any questions on that? Are you gonna have access to this video if you're a lifetime member? Yeah. Yeah, I don't really take a lot of direct entries. My data, I've collected a lot of data on this. I always use I always try to do confirmation entries over direct. Now, let me show you guys this in practice on NQ. These are two trades I took on NQ, and I'm going to show you guys why I took them using this model. Okay, so you guys can see a chart example of this. Yeah, it's the Da Vinci model, isn't it? That's an A plus setup. Okay, that is an A plus setup. That is what I look for. I don't look for like a B or a C. This is all I look for. Okay. So you want to see an inducement, liquidity build up, early buyers, sellers trap, entry from an LB. That's it. Yeah. Riz, stop spamming the chat. And I saw your question. I will come back to it. Yeah, it's just lower probability, Abhishek. So let's go on to NQ. Yeah, let's go on to NQ. I'll show you guys where I took my entries. So let me show that exact model at play so you guys can see. Can't even remember the day I took it, to be honest. But yeah, NQ's been quite a weird one, to be fair. Let me just have a look at where I took that entry from on NQ. Monday, Tuesday, Wednesday, Thursday. I think I took it on Wednesday. So Monday. Yeah, this is where I took it from. Okay, cool. So we can see how we induced buyers on the higher time frame. They go through this breaker structure. So we'll mark that out. We had a breaker structure. Now, following the exact model that I've just shown you, we have a reaction at these lows. Okay, look at how we induced buyers. We come into this area and then buyers are induced. However, what have we done here? We've taken a low, we've also induced sellers. So what am I waiting for? I'm waiting for sellers to get trapped, okay? And that's exactly what happens here, okay? We trap these sellers. Now, if we go down to lower time frames, we can see these reactions, okay? Look at how this candle caused a breaker structure to the downside. Okay, so as I approached the chart, I saw that we formed an LB. Okay, now is this something that I would take at an extreme in the AM session? Absolutely not. However, there is an LB above. It's not something I take. Now, what has this move done? We've induced buyers. Okay, this whole move from A to B, we've induced buyers. Now this, look how we come back into this imbalance. Okay, now I did take a long up, but I'm not going to go through the engineered liquidity moves. However, we can see how, okay, this move up induced buyers. We have a reaction at the lows. Okay, now again, just pointing this out, every move from this left side of this leg should be false. It should give false reactions. Look how we tap into this LB, okay, and we have a breaker structure. We take this high, forming an LB, okay. Now, what did I wait for? Now that we formed an LB, okay, so we can mark that out. So there's our LB. I'm looking for the trap. Okay, look how on the open, exactly on the open, we induced sellers and then we come up and trap them. Okay, look at the candle that caused that breaker structure. We can go down to lower time frames to see this much better. Okay, so I'm talking about this is the candle. Okay, that caused this breaker structure down. Okay, we can see that. And what does price do? It comes and takes this high. Okay, now this is exactly where I took my entry. Had my stops above this LB, and I literally just targeted this low. Why? Because we have engineered liquidity, okay, by breaking structure to the upside. Okay, we've engineered liquidity, and that was for a 1 to 3.5, and that was it for me on NQ. Okay, notice how this is now built liquidity. Okay, so we have liquidity now. As soon as we take this low, okay, where we engineer liquidity, price then comes back up. Okay, this is why your exit is just as important as your entry. Price comes all the way back up, okay, and takes all of that liquidity. Again, if we were to mark out the reaction, what caused this breaker structure, okay, you can see how price tapped into this area. Okay, look at this candle where we have this reaction which caused this breaker structure to the downside. We have liquidity up there. What does price hunt for? It's liquidity to liquidity, and then we have that massive sell-off. Okay, so that was NQ. Any questions, guys? Any questions? Why did you pick the 15-minute candle high as the one that broke structure instead of the swing high below it? What are you referring to? This 15-minute, this high. Look at the build up. So we tap in and we break structure above. Okay, we induce sellers and trap them. Okay, once we've trapped sellers, we have no reason to go higher yet. Okay, we have no reason to go higher because this move's induced buyers. Yeah. Because that's where the build up was. Yeah. I collect data in terms of my wins to losses on entries. So for example, I tend to do more better with confirmation entries once liquidity is taken. But I don't want to jump into the market straight away. That's why this webinar was specifically about reactions. Okay. We can look at another example. We can go to Euro USD. So we induced buyers, okay, and then we come to trap them. Okay, we take out all of these lows. Just mark it out. We come and take all of these lows. Now, what has this move done? It's induced sellers. Okay, now if we go on to the 1 hour, we can focus here, right? This move down has induced sellers. Okay, so if we've induced sellers, we are looking for buyers back up. Okay, however, we don't want to take these extreme entries. Okay, we want to wait for the market to engineer liquidity at the highs. So check this out. Let's zoom into the price action. What does price do once we've taken those lows? Well, we're looking for sellers to take positions. Okay, now you can see how this candle provided a reaction down and then we broke higher. Okay, we have these early buyers getting into the market. However, we're still having sellers in the market. So notice how we broke structure to the upside. Okay, so we broke structure to the upside. We come back down, we respect this whole candle. Okay, so we've respected this candle and then we broke structure back to the upside. So we now have liquidity at these lows. Price even hunts for that extreme inducement low. Okay, now that's a possible entry that you could have taken. Okay, at the extreme, that's still the model playing out. However, we try to tend to avoid these extreme entries. But let's look at what price then did. So remember, on the higher time frame, we've induced sellers. Okay, we mark out where we can anticipate potential reactions from. Okay, look at how we induce buyers through this breaker structure. We still have sellers, okay, in the market pushing price down. However, this move has induced buyers. Okay, now what caused this breaker structure to the upside? Okay, we mark out this candle. So this candle, we tapped into it and we broke structure to the upside. Okay, so what do we now have at these lows? We now have liquidity. Okay, so the market taps back up into, again, an area where we have sellers getting into the market. Okay, and the same thing starts to repeat. So we've broken structure to the upside, we come back down, okay, back into this area, building liquidity. Okay, and look, that is the candle that caused this breaker structure. So we have even more liquidity. Okay, think about all the liquidity we're building at these lows. Okay, now right before, this is really nice to see. So this whole area we've engineered liquidity at. Okay, so we broke structure, respected, moved away. So we have liquidity at these highs. So what does price do? It taps back into it one more time and we have that breaker structure away. This is really nice to see. Okay, if we break structure, we induce buyers and then trap them whilst taking liquidity from the left. We have an LB at the lows. Okay, I believe Abid took this trade. You enter as soon as that liquidity is taken. Stops I would have kept below the last LB. Okay, you could have kept it there, it's just risky. And then you would have targeted the highs. Okay, and that's literally the model playing out. Look how we just summarize it. We induced sellers on the higher time frame. We came back up, engineered liquidity at the highs, whilst also, as we're moving up, engineering liquidity at the lows. So essentially we have an LB, we have a build up, we have a trap, and that's our entry. Okay, targeting that engineered liquidity. We come to take it now. Look at this move here. I believe there was a confirmation entry here. So this move here from A to B has induced sellers. So what do we wait for? Okay, we wait for a reaction. Look how the market provides this reaction. This whole area. Okay, we tap into, if we go to lower time frames, we'll see this better. Okay, this is really important to see. So this move up has induced buyers. Okay, however, on the left we've induced sellers. Okay, so any moves from the left hand side are false. Look how we tap into it, we move down, and then we break. We have this breaker structure to the upside from here. Okay, I am waiting for buyers to get trapped. Now, what caused this reaction? Well, this whole candle, if we mark it out, this whole candle caused that breaker structure. So move this to the left. Look how price engineers liquidity. Okay, on the whilst we're moving towards that trap, we engineer liquidity at the highs. We take that low, again inducing sellers. Okay, now am I going to take an entry here? No, because we don't have a direct LB. So what do I wait for? I wait for that reaction. Look how buyers get induced. Okay, we come into this area, we wait for that reaction. Okay, so this whole area we can mark out. Okay, we wait for that reaction down. Okay, look at this LB we have formed. So I can mark that LB out. Now anywhere in this LB is an entry. Okay, anywhere in this LB is an entry. So as soon as we tapped back into this LB, stops at the lows, targeting those same highs. Okay, now we also have our higher time frame target, which caused this A to B, this high caused this low. Okay, so you could have taken it all the way back up to the highs, especially on the CFD account. Now there's also a trap. If we go down to lower time frames, we can see that. Look at how we induce buyers at this LB and then trap. Okay, that would have given me even more confirmation that we're going to move higher. So you could have also waited for that trap and got a better RR. But 1 to 19, what more can you ask for? So that was the model playing out on Euro USD. Okay, perfection. You guys are starting to see what I mean by the model playing out. Yeah. I'm hoping we kind of understand that now. So what I want you guys to focus on this week is, once you have that breaker structure or that inducement, wait for the reaction. Just mark a an alert that you want to see price come to this area and react from. You will save yourself so many losses, it's unreal. You won't trade within the ranges. You'll wait for that reaction up, and then you see, okay, did this form an LB? So maybe if you guys want to look at like a checklist, did this form an LB? Once it's formed an LB, that's when I'll set another alert. Okay, can price come into this LB? Do I have a build up at this area? Okay, that is how I want you guys to start trading. Okay, not a pattern where you guys literally see a buyer induced, buyer trapped. Okay, I now need to take a trade. You need to really think about the model. Think about what price is doing. Okay, now once you've looked back at this webinar or you've gone through it again, I want you guys to go back to the mentors trades. Okay, see exactly what we've done. Go back to your own charts, review your losses. See, did I wait for that reaction, or did I get impulsive and see a low taken, for example, and just buy? Okay, so you guys, that's what you need to think about. Okay, that's the only way you're going to level up in your trading. Okay. Yeah, guys, any questions? I'm pretty much done on everything I needed to cover. I'm not really going to cover the price action on NQ because I don't think we're in a place to take any high probability trades. We're in 2 liquidity points and we're at an extreme as well. So yeah, feel free to ask any questions or assets that you want to look at. Longs. Yeah, longs on EU for sure. Oh, by the way, there's one person in here who got this right, but I did say I was gonna go through. Um, I forgot what it was. But if you find natural gas on your charts, you'll look at the Da Vinci model on the monthly time frame. I repeat, I'll type it in here so you guys can look back at it. It's natural gas. It's a futures asset, and it's the monthly time frame. Feel free to look at that model. Um, but yeah, that's pretty much everything that I wanted to go through. Any other questions? Ugly is when you haven't got the direction down. Whereas, I'll give you a perfect example, Chris. Gold is clean PA in terms of direction. NQ is ugly PA because the direction's not clear. Simple as that. Yeah, if you're Alan, if you're in the WAP, a lifetime member, you'll get all recordings of previous webinars. Okay. Nah, Alpha Futures is strong. I believe Marco has a discount code and is affiliated with them. So yeah, definitely if you run into any issues, Marco's there to help for sure. I go through gold and NQ on futures, EU, GU, and yeah, that's pretty much it. EU, GU, and EA on CFD for myself. Riz, can you put your question again? I think you asked me like 10 questions. Just put your question. What did you ask? I don't think I got your question. Any other questions? The last entries had 2 LBs. Why did you opt for the last LB? Because that's where we built liquidity at Riz. We built liquidity there. We had a build up. And so if I see a trap where we induce sellers and then we trap them and there's an LB above, I'll take that. Yeah. Just because there was an LB above that doesn't mean I need to use it. Yeah. That's what pattern trading is. No, I don't trade crypto. I only ever analyze it. I can show you guys BTC actually. BTC. I've actually been marking this up. You see how we have induced sellers at these lows. We came back up to the highs, respected, and had breaks of structure. We have liquidity above these highs. But in order for me to buy towards there, you see how we have buyers induced in the market. And we have all of these reactions at these lows. I'm literally waiting for price to trap. This is an LB. It can even come to this low here. That's why I have it marked as well. So I have these two areas I want to see price come to. But yeah, that's how I don't really trade. I don't trade crypto, but I definitely like analyzing Bitcoin for sure. For sure. Yeah. No. I don't ever sell. Like I'm not gonna sell towards it. That's just low probability trading. Just wait. Honestly, just wait. Yeah, correct, Alan. So a liquidity pool always forms by it being respected and moved away through a breaker structure. Yeah, correct. At least someone's paying attention, and he's new.
Is it important to forecast? Absolutely. Your whole trading will change. Even doing a post analysis, for sure. For sure, for sure. Right, guys, that's pretty much it from me. I hope you guys have a lovely weekend. I'll see you guys tomorrow. And I'll get this uploaded ASAP. Thank you, guys. Any questions, DM me or put it in the chat if you have access to the chat. Omex, I haven't forgotten about you. I am definitely going to get back to you for sure. Take care, guys. Take care. See ya.